wouldn't reduce, if they don't reduce the probability that they rise. And to me, what we saw yesterday and today might look that it wasn't the bottom, and it still might have room to go down. On the other side, you also posted the VIX VC downside and some kind of double bottoms. I'm some kind of not sure um, how I should react, or a little bit um, unsure about the market, yeah, and would wonder what your opinion is about it.
Um, okay, it's it's a little bit always the same. Nobody likes my answers, but that doesn't mean that they're not still useful. When I say I don't know, and that's the honest truth. How should I? Nobody knows the future.
Sure.
But I know what to do, and what immediately struck me is when you say how to react, and that's exactly what you don't want to do. You do not want to react to a market. You want to have a preset idea, and then have the market to be matching that idea. So, ideally, in this and any other situation, it is good to have an idea about all possibilities. Now, do we make sometimes mistakes and maybe rule something out because we didn't see that Six Sigma event that's really coming, or for whatever else reasons making a mistake? Yeah, that's possible, but the general possibility, that's the typical, is sideways, up or down. So if you have these three scenarios covered where you say, well, this is what I do for each of these three scenarios, then that uncomfortable feeling of what should I do is going away. And that's the most important part, because let's say you feel uncomfortable, let's say you give it a weighting between those three, and right now you would say, yeah, I see some, but actually I see some more off than most of all, if you're just looking at the two sides of up and down and they're kind of balanced, and most likely it goes sideways. And I know these things might sound trivial, but really they're not, because
Mm-hmm.
you need to find a consensus where you're comfortable with whatever action you're doing as a result. If you're waiting, and this is what most people do, they're uncertain, and then they think that they gather more data, and then they find themselves in the field of trading where it's counterintuitive in principle, just ending up losing more and more money, because even let's say you would have a double bottom where we just had a turning point, we made some money on with the quad uh, exposure to that, and that's why I wrote last time of one of those last articles. Isn't it a nice situation that we're basically had four trades, all four trades were winners. One was the core aggressive trade at the lows. Then we had three reloads. And now we're left with three runners. Now today, one of those, or yesterday, one of those runners got stopped out, so we have only two runners left. But that would be my first principal answer: is if you taking that PPT approach, you are not encumbered with any of these worries. And I know you talked about altcoins, and I'm talking about Bitcoin, but
Mm-hmm.
in essence, these things are very similar.
Yeah.
So the point that I'm trying to make is as soon as you react, you are always emotionally exposed.
Mm.
Let's say we're getting to the double bottom, and you're basically losing more money if you have exposure, which I'm assuming you do, then you would have more certainties that there's a possibility of this going further down. But at that double bottom, the first thing that actually happens is that you're getting hopeful, where you're saying, well, now I have a double bottom. This is actually a good entry point. But it's not that you're seeking entries. You're more likely uncomfortable with the exposure. So, and we can have double bottoms that are divergent as well. So that right leg of the double bottom being deeper in price levels than the left one. So you sit that one out, and then by the time you're like absolutely certain, you're like you missed any and all boats of from an exit perspective. So that conundrum of sufferings in a reactionary position is never ending, and just in principle. And as such, it should be contemplated whether maybe a different approach of looking at these things should be differently. Now, in case, and I'm just saying this in general to cover this principle based, it's not a worry about an exposure that you have, but the worry about fear of missing out, meaning when do I enter because maybe this is a time to participate. Then it's the same thing. If it's reactionary and without a pre-plan of some sort of principle-based approach, you're right now asking yourselves, well, I'm not exposed yet, but I already missed basically a part of that leg. Are we now with the two rejections, and I'm talking Bitcoin again on a daily basis time frame, of having these pliers as a formation with a higher likelihood for a daily call for tomorrow going downwards, then the idea is, well, where do I enter? Yeah, well, as I said, with that quad situation, you already have exposure, so you wouldn't have to be worried about that. If it comes to a double bottom, you all the way towards that double bottom, consistently FOMOing and thinking, well, what if it turns too earlier? So you're constantly tempted, and most traders then take a position too early because the higher likelihood in principle is that it's actually a double bottom. But you're not buying the double bottom. So you're going again through a position at the beginning through a loss, even if it's a small loss, because you quickly have that double bottom coming. And then it gets really painful when it gets that divergent bottom possibility when you actually break those lows. So you're again getting hopeful, which is the human nature in adversity is we're getting hopeful, which in regular life is very useful, but not in markets. So you open up that stop wider. And again, either you end up with a wide loss, a larger loss than you're supposed to be taking, changing all your probabilities, or you're in brackets lucky and this thing turns around, but then you're like, by the time it's just break even, you already went through an emotional roller coaster that's absolutely treacherous for now doing good exits, because you want some sort of an exit. Even if you take a quad exit, you want that earlier than you originally planned, because you just don't want to go through this emotional turmoil again. So what I'm trying to explain is the principal answer to that question is, number one, don't think that way in regards to how should I react. The second one would be, do you really need to know? Because
Yeah, I
if,
was yeah,
yeah,
yeah. I
no,
I
please.
was wondering from a principle standpoint. I was thinking it because of the sell-off, there may be kind of a V shape, and now I was wondering if you think the reaction from the last 2 days, from a principle standpoint, looks like it won't look like a V shape, or if the if a or if it still could get the V shape from a principal standpoint. I think sometimes you
V shape on what time frame? What time frame are we talking?
yeah, on a daily.
Okay, sorry, I have to check my charts here. Um, okay, maybe you can post a picture of that V that you're seeing on daily in Bitcoin in the blue channel. So
Mhm.
just to make sure that we're talking about the same thing, because I don't see a V on daily.
Yeah. That's my my problem. I was maybe the last one. 1 second. Yeah, I take the one you posted a few pics again. Yeah, you're right. Wouldn't doesn't look like a V anymore. That's my kind of yeah. I posted it already, I think. Can you see it?
What's that, Thomas?
Okay, and where's the V? I see the chart, but I don't see the V.
Yeah, it's more of a double bottom and not like a V. I was
Okay, we have to clarify what a V definition is. Um, you a V is two equal sides from if you're talking a long V, in this
mm-hmm.
case from a left leg down to a right leg up, and they both have to be 100%. So I'm posting a V, a theoretical V now into that channel as well to tell you where I see a V.
Mm-hmm. I thought from coming from like 62K to the bottom, and now I was wondering if it still could go up and we could be on the right leg up. But these two
Yeah, but
weeks,
this is assuming a V. That's not a
yeah,
okay.
that's
Here
right.
here here is I posted the same chart that you posted.
And this
And a
would
V
have been
would
a
be
V.
if the right leg would be the same long than the left leg down.
Mm, so my
And at
concern,
that point, when prices would be there at that 40 moving average, that blue line,
mm-hmm,
that's when we would have uh, a higher likelihood than not that it goes briefly sideways, and then a dip, then a continuation. And I also draw this
yeah, you're right. So my my concerns um are true.
is
Oh yeah.
I'm posting another thing just to also show that these things make sense in context. One more picture is posted now. And here you can see that the idea of a V makes sense to the point that we would have inverse head and shoulders.
Yeah. Mm-hmm.
V, little sideways. I didn't put that sideways in there. I basically, it's that retracement has that
Yeah.
time component in there. Then it's an inverse head and shoulders and a continuation long. It would also be finding support what now has been resistance, um, and with the 200 and the 20 moving average, 200 being purple and the 20 being yellow.
Mm-hmm.
That penetrated, then retracing, then finding support, then continuation. That's in all of these things are possible smaller time frame interesting continuation patterns. What we traded so far is nothing but the action reaction principle on the bottom.
Mm-hmm.
That's just a very aggressive we have. And if you assume that very last bar that prints the lows as dark red all the way down, which it was at some point intraday, and
Mm-hmm.
you then compare these bars, one of the reasons why I stepped comfortably into this thing was um, after that green doji next to the 20 moving average, which is that top of that left part of the V, we have four bars going down, a smaller one, a one almost double as long, a one that's again almost double as long as the previous one, and the
Yeah.
very bottom one, which is even longer again. So we have this
Mhm.
extension of acceleration of fear.
Yeah.
Sell, 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 sell.
Mm.
And when it says sell, when everybody is screaming sell, that's when we bought at 53.86,
Yeah, really great.
864. And I know that I'm putting this into layman's terms, but it's really this is really where it should start. It should start at this psychological aspect of what are the basic principles of of how to getting engaged. And these things get lost. Are you having exposure? Did you buy somewhere at these lows?
No,
Okay.
I
So you're
didn't
looking for an
sell.
entry.
I how should I say? I kind of hodled it. I was in the company and working and didn't. I, I thought I want to sell after the lows. I didn't, and I thought like, oh, I had the same thought like you now. I think I would have bought, and then I say, okay, then I still have exposure, so I hold on it. And then I saw you buying, and I thought, that's the way I know Kobe. Always getting the bottom. Perfect. And now I also thought of a reaction, or I thought like the V shape you printed here, but then we became a double bottom. And then I thought like, yeah, also a nice formation. But the last 2 days, or today and yesterday, I was thinking, doesn't look that good anymore for me.
That's correct. And that's literally always the way. So I already, when I bought at 53.864,
Mm-hmm.
knew that this thing would not bounce further than the 200 moving average.
Yeah, okay, yeah. There you
That's
see.
why I financed
Mm-hmm.
really aggressively already on the first day, as you can see here. That's the core position where we only have a runner left. On the actual day when we bought the 53.864, 2/3 are 75% of the position is taken on, 50% on
Mm-hmm.
the financing, then the next. Then we go all the way to the 200, but I'm not going out, even so I know that there's this retracement, because the position that I'm in right now, that this retracement was survived by the runner of this position, gets me to a very comfortable spot.
Mm-hmm.
Now, the next thing that we did is we
Beauty
bought
principle.
into that retracement. So somewhere near that double bottom and two more other times, we basically made long bets. But each time, assuming, if you're just looking at where that inverse head and shoulder support resistance levels would be, you have a little bit above 60, not POC, but a high
Yeah, volume
distribution
profile.
zone. Then you have the
Mm-hmm.
20 moving average that comes steep down. If you have a moving average that comes steep against price, you always have a high probability that this will hold. And if
Mm-hmm.
you're just thinking from the short perspective, that's a prime short entry.
Yeah, yeah.
This is why I
Beauty
always say
principle.
entries are exits and exits are entries. I go out with my financing or second targets always when I see a nice short.
Mm,
So there was a first nice short yesterday, because we got against the 200 plus the 20 beauty principle.
mm,
This to be going higher is very unlikely, but it'd be still foolish to go out with all your runners. They're all free money. We
mm.
made a nice money on all 4 trades. 3 of those trades the runners survived. Why would we go out?
Yeah.
And taking the short side is a possibility, but it's a very late reload, because we already have 1, 2, 3, 4, between 3 and 4, you can even say 5 legs down from the highs of 72 that are on top of 72. You cannot see that here in that chart, it's to the left.
Mm-hmm.
But we can also not expect that this is right away going up. V's are very rare. V's are not the typical formation.
Yeah.
So I did not expect a V.
Okay.
I expected is a V on 60, and that's what we got on the lows. That bar retracing, turning into a hammer from where the green arrow up is on that chart that we're looking at right now.
Yeah.
There, that we have an intraday V was a high likelihood, or at least a fair likelihood.
Mm-hmm.
And if you trade the way that you just described, you will go through these roller coasters. And the question is, do you really want to do that? And if you do more of a trying to predict what the future does, trying to predict what a very close future does, meaning you already taking partial profits in these lower rounds and rather trust that it will be okay to reload later again, and then you don't have to go through these debates, because your debate is absolutely clear. You say, well, this is a double tweezer. This is for tomorrow, daily call, sideways to down. And that being Friday, ouch. But then you, on the other hand, say, yeah, well, but what if it's not? I mean, we already have a double bottom on the thing, and we are 4 legs down from the bigger picture, and weekly starts to look attractive. Why don't we? Maybe Matthew, you can give us a weekly chart. So there is always this conundrum. In one time frame it looks long, on the other time frame it looks short. One day it looks long, another day it looks short. So the whole idea of the quad approach is based on that hodl approach is so taxing emotionally.
Yeah.
If you buy one Bitcoin and you bought it at whatever, let's say 40 or 400 or 4,000, somewhere low, you still have that. I don't think that there is anybody who's just like, yeah, I buy it and then I look 20 years later. That is very unlikely.
Yeah.
So size matters. So you can do this, obviously, hodl with less amounts is easier than hodl with leveraged amounts.
Yeah.
But in general, the conflict when to get out, if it's an all-in, all-out approach, or I never get out, or I don't know, if you're just looking at the chart that's printed right now, that means, let's say you bought it at 4,000, you were elated in October 22 when it was somewhere at 70,000, and then you were depressed when it went down to October 23 a year later, because now it's at 15,000, and now you can be elated again that it was at 70,000, and it's just all the time that suffering and no guarantee of consistently producing income, because only if this thing goes to 1 million and you held it for 20 years, or wherever your exit is the exit then 1 million, or is there no exit at all? Because, do you know what I mean?
Yeah.
And what I found, and there's traders who do this, and there's traders who, in brackets, do this successfully. But what I always wanted, I come from a
Consistent income.
trained as a chef. I'm trained. I have a master's in audio engineering, and I was a professional musician. So I'm coming from harmony, creativity, and mastery. And mastery, in my opinion, is some form of harmony. When you, what fascinates me, and I'm not a specific, I don't have a specific field of hobby or interest or sports or something like this, but I find everything, literally everything, whether this is a cobbler or Michael Jordan, makes no difference. But if I observe mastery, I'm just fascinated if somebody does something that seems really difficult to do, and they do this really effortlessly. And my value that I give these things, especially all these things that I have no clue about whatsoever, is that harmony. Meaning, if these guys do something and girls that is looking effortlessly, and there's a difference. I mean, like, I've been in the second row here in LA, the basketball court. You can tell that these gigantic guys playing basketball put out some effort, way more when the sweat hits your face than on TV. But in general, it's magic. It's like they take 6 steps to cross that whole field to be on the other side, and then the ball is all the time going in. I'm trying to teach my 5-year-old basketball, and I miss all the time. It's like it's really difficult to do this.
Yeah,
But
yeah.
for them it looks like it isn't effortless. And I think that training or anything really has to be the same.
Mhm.
And this approach that I have created is that approach to this effortless thing. I didn't want to. Um, Many of these old school trainers have these. They trend. They trade trend days and they pyramid and do all this kind of stuff that's really hard to do. Break even for most of the year, and in 2 3 weeks they make their profits because they end up with pyramid trend days at the end of the day. That would be so hard for me to do. Obviously, it has to do with individual mental makeups, but why I'm trying to drive this home to so much is that it's really worthwhile thinking about this in principle of, in a way, for many, it's also an addiction. Gambling is nothing but the addiction of having certainty to feel bad. Many of them, the true gamblers, go actually to suffer because you have a guarantee to suffer. And in between, you get these highs. To have that difference between this super high and then this super low, between exhilaration and devastation. And this is basically what gambling is. And as humans, based on the basic 6 human needs, we have a human need for exactly these extremes. We really like to be on top, and we, in brackets, really like to be on the lows too, because that supplies the need for variety, and that supplies the need for being part of society, where most people go through these extreme cycles of these extremes. But training or mastery it's all about balance. It's about harmony. It's about swings that don't go that extreme, especially on the income curve. Or you don't want to have any of these troubles, and performing consistently. And I can tell you, I I I like extremes too. I did bungee jump. I jumped out of airplanes. I did all kinds of crazy stuff in my youth.
Cool.
But the consistency, harmony, balancing that I'm doing in training, which is very difficult to do, is the biggest acceleration I've ever had.
Mhm.
Because it's fascinating. I am fascinated by myself. Oh,
Mhm.
another winner. Oh, another low risk entry. And this is what all I'm looking for. So instead of looking for where could this stop, what kind of level it would be, where could this go, um, is I only ask one question: where is there a low risk entry point for me? And I
Mhm.
wrote that article just a couple of days ago about this turning point. Maybe you want to reread this. And I traded this turning point on less than 1/4% risk between
Yeah, I
those
read that.
four
Mhm.
trades. And this is exhilarating.
Yeah.
This is really, this will, I know that right now you get some thrills out of, up, oh, down, out. But to get, to be able to do something that very few other people can do is also an extreme that you can really get nourished by for yourself in regards to ego and vanity and whatever else these things trigger
Mhm.
that we pride ourselves to be special or to be different or ego nourishments. They're all included. You don't have to become a monk. You don't have to be whatever. But ask yourself, do you really want for the next 50 years to all the time go through this crazy ride of basically just trying randomly to figure out where there is support and where there isn't? By the way, that chart, that weekly chart, it's a very nice chart.
Yeah.
It shows where the support is. It shows that
Mhm.
the support is a little deeper. If you're looking at that first of the three triangles to the left and look at that behavior at the 40 moving average, this time we haven't really touched it yet. So if you in your mind print green bars now from here on up,
Mhm.
is a less likely picture or should reflect as a less likely picture in your mind than maybe one more red bar coming after. And obviously, the green bar that we have to the right now can already turn to a red bar
Yeah.
tomorrow. But basically, a quick dip. Um, look to the left at that green long bar where there is this little yellow
Yeah,
wiggle,
yeah, yeah. Also dipped
and then
under.
have a double bottom at that level because we have an M for murder on top, meaning we have the shorts are the shorts are very happy that this thing broke through 60. That's a big line. That's the neckline for the M. That 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 and
Mhm.
it was a struggle if you remember.
Yeah.
That's why we have had that hammer right before it. 3 bars to
Mm.
from the right is that hammer formation. 60 was great support and took effort to break. And possibly for the confidence for the longs to go up there again is when we have the same small, tiny little bit of overshoot to the 40 that unit principle wise we had to the left. And see how long this went sideways to the left there on the 40.
Yeah, yeah, yeah.
That would also be in lineup of we have the summer doldrums coming. And so I'm giving you a few now more after that principle lecture. And I'm sorry that giving you a hard time, but I feel like I do you better of a service if I do that and what I'm doing now, which is just pointing out edges. The edge to go long right now, um, I would give as an immediate long without the double bottom. And when I'm talking double bottom on weekly now,
Mhm.
is a little bit less likely than the bottom itself. You add that unit principle, you add that small, white, long, rectangular fractal box that Matthew made in the 50K zone. Um, so that is a little bit more likely that we have that retracement than going long. But the immediate problem, let's say you're having exposure and you say, oh, no, it doesn't look so good for me anymore. Maybe I should go out. And you go out. Then the immediate next problem is, yeah, I would like to go in again. And
Yeah.
somewhere close to where you are right now.
Exactly.
And for all these scenarios, there should be rules. Either
Yeah.
you're one who's holding or you're a person who says, no, I'd rather do re-entries. My preference is re-entries. Why would I sit through if I wouldn't have a quad system? Why would I sit through a very high likely sideways to down tomorrow if I can grab lower? But for that, you need to know. You already said I'm at work. Maybe your trade frequency is not as high.
Yeah.
You're worried about missing that entry. So
Exactly.
all needs to be rule based, and the best advice that I can give is instead of worrying about that scenario right now, worry about your approach. If that approach is from a systematic perspective already that well rounded that it fits your personality and that well defined that you can really lean against it in regards to what I always say, that I love principles so much because a principle is defined as an ultimate truth, and you don't have to believe what I'm saying or anybody is saying. You just, it's an ultimate truth, and therefore you can lean against it, and that leaning is what's so imperative for a trainer, is to have that confidence that's required for proper execution, because without confidence it's just no, it's exactly where you are right now. It's very difficult to say, yeah, what should I do?
Mm.
I'm not confident about or this being double bottom, or and I think confidence comes with rule applications, and rule applications should be principle based, and then you just have a system where you have an anticipatory way dealing with your positions, if the market matches your scenarios that you dry run ahead of time, versus being victimized in a reactionary position that you find yourself in right now, which to a certain degree you always are. As soon as you have exposure, you are forced in a reactionary way, but trying to have that at least 80% rule-based and 20% discretionary makes the whole thing a lot easier.
Mm-hmm. Yeah, great. Thank you, Kobe. It was a really good.
And it's
Good
totally
stuff.
fine to, after that, going back at this. If you say, well, but I still would like to know, can you tell me that? That's fine. I just always start top down because it's more than just us two in the room here, to everybody getting the principal benefits as well. So
Yeah.
I'm writing a little bit your your question for the principles.
Yeah, yeah.
So because I know that you're experienced, and I don't want to, uh, if you have more questions to that specific scenario, it's totally fine to now go into the nitty gritty small parts where you say, hey, is there edges that I don't see? What's your prediction part?
No, it was quite the way. I know you, and you answered me like, and you understood my question right and everything, and so was a good overview how I can improve and handle the thing, and uh which principles you see and likelihoods, and yeah, thank you.
One thing that I might want to add, thank you. I could not have said anything smart without your question. Um, where it makes absolute sense that you're a little tripped up, because as I said, I know that you're not a beginning trader,
Mm-hmm.
is with the trading behavior today. Meaning, we had a very nice, and maybe Matthew, you could give us back a daily chart, please. Be awesome.
Pardon?
If you could give us a daily chart of Bitcoin, please.
Yep.
Thank you.
So my call from yesterday for today, my daily call was sideways to
Sideways down.
down.
Yeah.
And we could have easily had a sideways to down, which is still the right call for today, but from a tradability perspective, had a tradable sideways down. But we
Mm.
took out the highs of today,
Yeah.
and then we had that retracement. So up until most likely there would be a news thing, we actually went up. And that brings another element of uncertainty. Now with most likely this thing closing somewhere where we are right now or lower, we still have 3 hours to go in Bitcoin. We have a higher probability, obviously, after a double top on a 60-minute chart and these tweezers here on the daily chart for sideways to down, but it also shows of the high likelihood that bears are still very confident in being aggressors.
Yeah.
So when I get this, I start also, let's say I would want to reload short, and I take a nice short tomorrow if it should arise, but most likely we won't get that either. What I'm trying to say is we're trading already very ugly. We're trading summer. This is summer trading.
Mm.
It has started that we see these chops on day on intraday, even on the indices. We had that strong breakout today in the Russell. So what everybody's buying now in brackets the
Yeah,
crap.
crazy.
No, this is not crap buying. This is hedging because the S&P is broke out to these new highs after this compressed day. It's all very difficult. Nobody wants to buy the highs from the professionals. Nobody wants to short the overbought stuff to be first in getting squeezed. Liquidity starts to diminish from a volume perspective where we're getting a little less. And it's just not a time to step in. This is why I wrote today in my last article that part where I said very difficult for traders is to accept that you might for weeks don't have a trade because we
Mhm.
all long for these consistencies. That's how you grow up. You grow up and you can be taught, well, you have a 40-hour week and you do this from Monday to Friday, and then for every hour you get your 32.50, and then we add this all up, and then by the end of the month you get a check. Trading doesn't care. If you trade a higher time frame, and this is one of the reasons why I am not a position trader in higher time frames. I mean, I have my trades extend into these larger time frames, but I'm an intraday trader. I trade daily positions. There are a few days. My typical trades are a few hours, few days. And why do I do this? Because I enjoy that certainty of this consistency. It's easy to predict the shorter time frames. And I have my 2 to 5 trades a day throughout the market, and I get my money. But would I like to be in the position of real professionals who would ever have 5 trades a year and check the markets once on the weekend for an hour? Yeah, of course, I could do some other stuff than just sit endless hours behind the screens. But I don't have the expertise because it would kill me to know that, okay, there is no trade for 6, 7, 8, 9 months.
Mm.
That pressure that there is a trade coming up, and that obviously this is more like fundamental traders, which is my cup of tea. But what I'm trying to say is, no matter what time frame you're trading, there's always this dilemma that just because you're ready to trade or just because you're willing to trade doesn't mean there is trades.
Yeah.
And Matthew very smartly repeats this for all of us in the Blue Channel consistently lately, where not trading is a position, and it is.
Yeah,
Not
for
just
sure.
a position, it's the most valuable one because cash is king, meaning nobody can take your money away. And it needs to be used. That part of when I said before up, sideways, or down, I should definitely add, and no position, which is a chop, class B, ugly trading, bamboo, all these non-tradable environments and lousy trades. And my trade frequency over the last 4 weeks, I'm sure God noticed, has also reduced. I still try to push it a little because I know for educational reasons it's good to have trades that you guys see and that you can discuss, and that confidence that I post them in real time, so it can be seen that it's working and that everybody can do it. And but it's hard for me too. It's like, could I handle 2 or 3 times as much trades? Yeah, certainly. But if they're not there, then I cannot force them. You
Yeah.
can make different systems and you can expand your trading horizons in regards to different markets. And it's not that you cannot do nothing, but it's it's especially challenging to have that kind of dilemma that you're having at a time where it's already hard. And I completely understand why this gives you a hard time, because all the people who, whatever, shorted still got possibly stopped out today because we took out yesterday's highs.
Yeah.
So the shorts were not too happy either. And when I have this, then typically we possibly end up in triangles. So if you, I already posted, that's basically the triangle just reduced to the 60-minute chart into the blue room. That's a significant line. That bottom diagonal line is a significant line for me. And it would be the same if you connect the what you called before a double bottom, those two lows, 4 days and 7 days ago. So that next line that probably crosses somewhere a little bit above 56 would be an interesting thing. So you also can see on daily that valley exactly at 56. That's certainly something where I would be looking again. And I don't like that kind of talk, as everybody knows. What do I know? What's the day or two? I don't like.
Yeah.
I'm not trading price. I'm trading price behavior, not price. But just to also not let you hang there with the situation that you're in, is you certainly have reasons why you're still thinking positive in regards to your position. Unfortunately, the immediate tomorrow, Friday, with those tweezers is not necessarily your friend, so to say.
Exactly.
Your emotional support.
Yeah.
And I don't want to give advice of should you get out. That's just, if it's already like, just follow your rules, what you always do. And if these rules are faulty after that trade, improve these rules to what you think is conducive to your mental makeup and your future situations.
Yeah.
If that solves your immediate, then maybe this was the Q&A, since we almost did an hour on this, and leave some
Thanks
room
for the time.
for Matthew's general close to end of week analysis and recent trades and whatever else he has in store for us. And thank you for the opportunity to let me answer your question. And most of all, thank you for coming. It is each time a pleasure to engage.
Thank you very much, Kobe.
Thank you.
Just to go back to the anticipatory idea, because we don't want to react, because when we're triggered, our emotions are probably going to lead us to the wrong area. Just going back, right? So for a sideways down call, right, the first acceptable area would be the high of the current day, which, I also, when I was seeing this, I said, well, this is the high of the day. I marked this zone a little wider than this because we had this intraday V, which there's a principle that you should never fade against a V. Now, I did that anyway here, but I mean, the idea is that the larger the V, the greater that principle applies. So if I wouldn't be fading against a V on a daily type of thing, right? That's what we were just talking. But that was one weight that I was in my mind. I was thinking if this breaks, this would probably be the zone that I would want to short, right? But what ended up happening is this broke, right? The Ethereum broke. And I think I was exiting ES or took 75% off, and I just around this time and I didn't get back in again. But you could see this was really the area. So just as a heads up, when you're thinking about these things, saying, hey, this is not that great of a zone anyway, this is just the high of the day. This is the real key swing. This is yesterday's high. We had a bigger move off it. Very simply, small move, bigger move, right? And on top of this, right, if we go back in time, right, we had multiple confluence points where this acted as support and support, right? And then we broke it. So potentially this is almost like a balance, right? That if it holds, it could continue balancing, and if it breaks, it could be a short squeeze. But this was the area. So I'm having these dialogues, right, about, the idea is that if I took the shitty one, I had to be prepared to take this one. I just didn't execute on that idea. But if I did execute what my system said, bam, it would have made it everything back on this idea. Now, ES proved pretty good, but you could see even with the ES, I mean, the real idea was on this downside, right? I mean, this did not feel short. When you place this was slow, all chop all night. Then you put it in here with a 4-point stop, which gets us below this key, right? This is the last leg up, so you want your stop a little below this, 4 to 5 points. And look what this got. We got a nice move here, and I was 75% off in profits around 5707, 5700. And that was, a decent move, right? 30. I was excited about this because this was like 20 something points in a very short amount of time. And each one of those points are $50. And if you have 4 contracts, obviously you could leverage this up, but you don't want to go over your count. And then the idea was that, okay, we'll see what the runner's like. Now, as I was posting the bullish market internals, I'm also keeping in mind the scenario, and I don't always post all this, right? I said, oh, wow, we are very overextended in markets. Even when you have a bullish market, when you're overextended on multiple time frames, you're prone to pullbacks, right? Right. So the idea was that as this was struggling up here, I had to remind myself, I don't care about the runners. We'll see what happens. But I'm thinking, wow, we could be in a situation where we have a trap trader situation where despite the larger time frame being up and despite the market internals all trying to break out, we're struggling here. So if that fails, I'm always thinking, wow, this will tip so hardcore the other way. Now, what really made it not necessarily a hardcore trap trader situation is that you really want to be against the larger time. You don't want to be against the larger time frame bias with that setup. So far, I've discussed in the call the zone fade for a tradable reaction and the zone fade for reversal. But there's also this trap trader setup that's only for the S&P because I use the market internals to do something counterintuitive. And you can see, bam, right? But I don't have to. This isn't a game of perfect. I did extract profits out of this. This was a good move. But you could see this was the really, real big move of the day. Now, just because you see a big move doesn't mean there's always a low risk entry to get in that move. That's where that hindsight bias comes into play. Let's see what the market internals were doing at that time, which was about 10 in the morning. So at 10 in the morning, right, we have an 880 line that's like pretty much almost every single stock in the New York Stock Exchange was up. Like every stock was up, right? But that wasn't so obviously a short at that time would have been better if we had something opposite that, right? So let's go over to 10 a.m. here, right? Lots of strength, right? But despite that, despite that, right? The fact that we eclipse this candle, right? That wasn't giving me confidence. That's when I said I don't care about the runner. And then if you look at the daily, we are overextended, and then anything can happen. So you've always got to be nimble in your thinking in terms of what you are able to extract from the markets. Just because this went down doesn't mean I said, oh, this was the ultimate short here. I mean, there was nothing really saying, hey, I need to get out of my long now in short when we're not even at the high day, because this would have been a pretty wide stop. And why would I want to take that risk? I mean, I would have had a very wide stop, and I would have maybe had to only bet one contract. You know what I mean? So it's like you have to wait for good trade location. You can't get everything. Not every move is something you can capture. But yeah, you could see that a lot of longs got trapped there. But you know what? With the quad exit, I took 75% off there, so I don't really care. So bam. And now you just back off, right? Because there was nothing really saying this thing was going to, other than the fact that markets that are overextended are prone to pullbacks, right? Nothing in these internals was suggesting that. But obviously they're not live right now because we're closed. Everything's still right now, but you could see that if I wasn't prepared ahead of time, this entry, which was before the market opened, right? It was like an hour or so before the market opened, because the market opens at 9:30, but there was that CPI number, right? So I wanted to get in prior to the CPI number, and I believe I got in 30 minutes prior, because there's a rule that I don't like to get in to volatile market moving news right when it's like 30 minutes before the news event, which is at 8:30 today, and 30 minutes after. Because if you were trying, let's just say you were an amateur trader and you saw this giant move, and you know a little bit about this market internal thing that I showed you, but you don't understand context, and you just bought a breakout today, not understanding that we're super overextended on the daily. Let's just go to the daily. So that's why that daily call, if we did a daily call today, yeah, there'd be certain things that would be bullish on the ES, but what wouldn't be bullish is the leg count, right? The leg count is extended, meaning when you count up how many times the bulls went up here, this is one leg, two leg, three leg, right? We're getting into the fourth leg here, depending on how you interpret it. 4 to 5 legs are reversals for that. Pauses to reversal possibilities. I always say neutral to bearish because it is hard to step in front of this. It would be hard to step in front of this, but remember, right? The short term is up, but this was the biggest candle. I always say that usually these things reverse. Like, look, this was the biggest candle, and it's usually, if it comes at the end, it's usually when we get that, right? And then, so if you were going to do a daily call today for the candlestick pattern, right? Especially if we can close more a little bit below here, this would be a bearish engulfing pattern, which is bearish. This is not good for the bulls here. But I mean, what'd you expect? This thing just goes straight up forever? I mean, these things do go sideways. They move in thrusts and corrections. So we were super overextended from a leg count perspective. Now I add other things to that, which are like, you can talk about the time frame analysis I do, and then you can talk about the 100% range principle. Look, we were above that, and you could say, okay, well, maybe the range was down here. Even so, let's get rid of this clone. There's a little bit of an art and science how you want to draw these, depending on how many touch points, but we're getting there, right? Like, this is, you should be, if you were, right? So the idea is that the professionals that got in here, when they knew that the short term and the intermediate term were both down, but they were so down now that the big picture bias, which is why I had this zone super marked, right? Bigger picture bounce breakout. Bigger picture bias was going to realign the time frames up, right? And that's a possibility. Now, the same thing is happening up here, but now the multiple time frames are going to get realigned down. Because even though there's blue sky here, right, we have leg count as a way, because there's no structure above us. We're in new territory. I can't go to the left and find a resistance zone and say, oh, that's a target, right? This thing is just overextended, right? So that's why we had to be open to that, right? I was actually surprised we got that much of a news at 8:30. Oh, okay, well, there's the market move. Market moving in news events can make things pretty volatile, right? So that's why we don't like, at least for me, I don't like to get him in 30 minutes before or 30 minutes after. And that was kind of the day for the ES. Now, what will probably happen now, because we've been 100% of this range, and because our leg count is reversed, and because we have this engulfing pattern, is we will probably now shift potentially. Our larger time frame bias is not bullish now, right? It's neutral, right, to bearish, right? We will be bearish now once this confirms and we start to go down, right? But this is where you could now begin shorts because of this, because we are open now to shorting on good trade location, because now, even though we were bullish before we were sideways up, we were not going short. Now we're going to be open to shorts because of all those other the leg count, the 100% range, so on. This thing getting exhausted. There is a not that I look, everyone always talks about these divergences, especially these larger time frame DCA guys. They are talking about divergences that have lasted for months. So really, is there an edge here? No. Right? But because of all those other things, yeah, I do see the fact that, yes, there's a divergence here, and there's a hook from extremes. The price tried to go higher, and the CCI couldn't get the momentum going. So besides all that, right, this call was a great call. It was just a little psychologically tough to execute this because we are in this lower quadrant. But remember, right, the story of how we got here, this is a very strong downtrend, right? And we can see the moving average following it. We can see that this candlestick pattern was also down. Right? If we were doing our daily call for tomorrow, both our moving averages were bearish, right? Our candlestick was down, right? You could even say potentially, right? The leg count, right? Getting exhausted, that's on our side, but that would have been better if it was more down here, right? So in isolation, right? I'm sorry, not in isolation, as an aggregate of the probability calculation scale, sideways down was right. And yesterday's high did get faded. That was the key zone. Also, we had sort of a zero line reject coming into the zero line reject is when the blue can't get over this purple line here, the zero line, and we get this great overshoot here. Almost a reversal. This is showing exhaustion, right? And it's a more of a shorter term thing because it's not like we're at a hook from extremes, like we're up at the top of the range again, right? But that was another one pointing down, and that's the day we got kind of a weak sideways down day that let's just actually go on the lower time frames real quick. That favored the bears by the end of it. But that was a nice wide double top. And you can see, right, the edge, putting it at the back of the zone got the greatest fill. And then you just give it enough room, right? Now, usually what I like to do for stop placement is when I'm drawing these zones, I like to get my stop near, right, or into the next zone, right? But if it's too wide like this, then I would take a 2R stop where you have something in between, and then one there if you would take it again. Now, it's not that every single zone I'm getting faded. If it's directional, I'm not fading any zones, right? I'm actually using the trend to get on board or anticipating in the direction ahead of time. But then we actually stay away from the trend. And we don't fade again. We don't fade the trend now. But this was a day where, you know, most likely these days are going to be two-sided because there's no conviction. Like, so even though we started from here, and if you look at the daily and say, oh, the price started from here. I mean, the story how we got here was just completely disgustingly two-sided. There is no conviction. Really, I mean, really just even this creep up, disgusting. Not really, the risk was really the only decent trade if you could have prepared to short that psychologically after the high of the day, which was the mediocre setup got set up. But you know, you don't have to capture every single setup to make money in this market, or even on a day like this where I actually bet against the wrong direction. By the end of the day, I still made money, good money on the quad exit there. So that's my kind of little final take on some of these signals I gave today, and we'll see how the market goes. I know some of the guys that just joined, there's not a lot of action. If you actually go to some of the pin matches, you'll see sometimes there was actually 20 trades given in a week when we had intermarket synchronicities and major turning points where there was like basically income producing trades and major turning points for investors that position trade. So that's when we really like to go in, but also keeping people out of the market is important as well. And you can see Kobe's very good at helping us reduce our risk when these things are looking really strong, but they're actually getting exhausted and ready to reverse. So thanks for coming out, guys, and we'll see you guys in the room. Appreciate you.
Thank you, Matthew.
Yep. Take care.